As the new year begins, there is no doubt that some of you would want to improve your financial standings this year. One of the best ways you can improve that is by getting into regular investing. For a beginner investor, there are many different platforms, but one that I would recommend very highly amongst all the others for beginner investors is InvestEngine. Now, InvestEngine only deals in ETFs, which is probably the safest way to actually start investing. So for absolute transparency, I am an InvestEngine affiliate member. However, I do use a number of different investing platforms, and as a beginner I really do think InvestEngine is one of the best. If you like what you see in this video and want to sign up to InvestEngine for free, make sure you use the link in the description down below. So without further ado, let's get straight into the portfolio. So one thing to note is that InvestEngine has changed its look. So they've changed from the old color to this new purplish blue that they have going on. I actually really do dig the new theme. I think it's a bit younger and more current. The way I would like to describe InvestEngine is that it's like Vanguard, but it's cheaper and easier to use. And what I mean about that is InvestEngine is one of those platforms where you just put your money in and you forget about it and come back in however so many years and just see your money that compounds over time. This is in part due to the fact that they use very low fees, but also because the money is only invested in ETFs. And that is essentially what my portfolio holdings are all made up of. So as you can see, the total balance is £589, and for the first time we are seeing some green overall in the portfolio with a gain of around £13.98. Going forward, I'm going to be trying to put more money into my InvestEngine account, as I know that as an investor that is how I should be investing. Honestly, when I recommend it to anyone else, I say that ETFs, long-term investing, is probably the best way to go. But anyway, let's go through the portfolio and see what I've got holding. So as you can see by the three green cards here, I have three different portfolios, all consisting of somewhat mix of the S&P 500. So let's go into this one called the VUSA VJPN. So this is a mix between the VUSA, so the Vanguard S&P 500, and the Vanguard FTSE Japan. And as you can see, InvestEngine does allow you, when you open this portfolio, so when you create this portfolio, it allows you to change the ratio of the two ETFs. In fact, if you want more, you can actually add these ETFs, and there's over 550 to choose from. And what is great about InvestEngine is the fact that they charge very low fees on top of the total expense ratio, meaning that in the long run your gains are not going to be eaten up too much by these fees. And what's funny is that Vanguard charges the same amount for their platform, but they charge more maintenance fees. So actually InvestEngine is cheaper, and it's also a lot simpler to use with an actual mobile application, which Vanguard doesn't have at the moment. So anyway, we can have a look at the progress of this portfolio since inception. In its maximum form, you can see that it has a value of £184.14 with a net return of £4.67. That's a gain of £6.14. So over the past month, we actually have been seeing some very good gains on the S&P 500 index, and that has mostly been from the 6th of January onwards, where all these tech companies have been gaining in their valuations and increasing the S&P 500 as a total. So in the past 6 months, we can see that we've had a very bumpy ride. After the 6th of January, we can see the increase in value of the S&P 500 in conjunction with the FTSE Japan. We can also, if we want to, check individually on each different holding. So for example, the S&P 500 is, over the past month, we've seen a big increase. But then if we look at the FTSE Japan, we can see over the past month, we have seen this exact same increase from the 6th-ish of January. So it looks like overall the world market, there has been some sort of increase around the 6th of January. Maybe it's due to the fact that inflation is kind of leveling across the world. Maybe there, or at least there is hopes for that, which might signal that interest rate rises are beginning to slow down, and in the future they might come down. So also within this portfolio, you can see that I have £1.07 in cash, and right now I'm going to buy some of the VUSA just to show you that you can invest the spare change that you do have in your portfolios. So all I have to do is press buy sell, and what I like about InvestEngine is that it's going to let me buy the odd amount, so that's £1.07. Press review order, confirm, and order is submitted. So tomorrow when the markets open at a specific time, they're going to start buying that. My second portfolio is the VUSA VJER. So in total, this portfolio has gained me 6.35% with an unrealized profit of £7.24. So over the past month, we have seen a steady incline. This portfolio is currently a 50-50 split between the VUSA and the Vanguard Germany All Cap, which is one of my favorite ETFs just because of the sheer volatility. And we can see over the past 6 months that this ETF has gained 21%. So actually, if I had been investing into this, which I thought was a good idea, I would have probably made around 20% gain, which is really good. It just goes to show that investing in ETFs could be a viable option for long-term growth. This is because ETFs are incredibly diversified as they are. So this is the Vanguard Germany All Cap. It's the top X amount of companies within within Germany, it's very unlikely that all these companies will go to zero. This is because not only is it unlikely that the whole German economy is going to go to zero, but also some of these companies such as Adidas have customers everywhere in the world, meaning that it's very unlikely that they're going to go completely bankrupt. If you did want to check out what the holdings of the Vanguard Germany All Cap are, InvestEngine actually has a breakdown of the companies, so you can see all the 150 companies and the percentages that they are found in this ETF. One thing to note is the total expense ratio, so this is basically how much the ETF costs to run. Unlike Vanguard, it doesn't come out of your actual balance. You don't actually have to keep money in your account for the total expense ratio. This will come out when you buy and sell, so you really don't have to worry about the total expense ratio. That being said, some ETFs might have a high total expense ratio. For me, anything over 0.5 is beginning to get very high. And finally, the last portfolio I have is called GSPX. So I actually made a video showing how I invested over £50,000 in a single day into the GSPX, and I think that's going to be the future to where all my investments go. So as you can see, since inception, this portfolio has gained me 3.63%, so that's a £2 return, so not too great of a deal. I have £1.41 in cash, so I'm actually going to invest a bit more now. It is good to know that with ETFs and this kind of investing style, is whenever you get money, you put it into your selected ETF, and you really don't have to think about anything anymore. £1.41, confirm. So the great thing about InvestEngine is that it is beginner friendly. It's very beginner friendly. You don't have to worry about timing the market. You don't have to worry about trading, because you can't actually trade with InvestEngine. They make it quite difficult to trade, which could be a disadvantage, but I think as a beginner investor and someone who's looking to build wealth in the long-term horizon, this is honestly one of the best tools that you can use as an investment platform to pick 1, 2 or 3 or however many ETFs you want with whatever ratios you want in your portfolios and just contribute money monthly. For example, if I go back into GSPX, we can actually enable auto invest, so whenever there's cash available, or you can set up monthly deposits, so you can set up your monthly top up. So for example, if you want to invest £100 a month straight from your bank account, you can do this and it will invest into whatever ETF or whatever portfolio you have, meaning that you never have to open InvestEngine again. But of course, if you wanted to, it's a very easy and pleasant experience. So if you do want to sign up to InvestEngine for free, you can use the link in the description down below. Make sure to check out some of my other videos, and I will see you in the next video.